So, you're thinking about getting your first credit card. This is a huge step. Seriously, this isn't just about getting a new piece of plastic for your wallet. It's about starting your official financial journey. The right card can be an incredible tool. It can help you build your credit score from the ground up. A good credit score is like a financial superpower. It unlocks lower interest rates on future loans, like for a car or even a house. It can even help you get approved for a better apartment. Choosing correctly now sets the stage for your entire financial future. On the other hand, a bad first credit card can be a disaster. Some cards are loaded with hidden fees that eat away at your money. Others have confusing rules and terrible customer service. If you pick the wrong one, you might find yourself in a frustrating situation. It can make building credit harder than it needs to be. This decision is more important than you think. It's like picking your first car. You don't need a flashy sports car right away. You need something reliable, safe, cheap to maintain. Your first credit card is exactly the same. Think of your credit score as your financial report card. When you get your first credit card, you're basically enrolling in a new class. Every payment you make on time is like getting an A. Every time you keep your balance low, you get extra credit. A good score tells them you're trustworthy. Let's get down to the basics. What even is a credit card? It's not free money. I have to say that again. It is not free money. A credit card is a tool that lets you borrow money from a bank to make purchases. Think of it as a small, short-term loan. When you swipe your card, the bank pays the store for you. At the end of the month, the bank sends you a bill, called a statement, for everything you bought. You then have a deadline, the due date, to pay that money back. It's a simple cycle. Borrow, spend, repay, purchase, bank, pays merchant. You receive a bill, you pay the bank. The most important rule in the credit card universe is this: always pay your bill in full and on time. Every single month, no exceptions. If you only pay a part of the bill, the bank will charge you interest on the remaining amount, and credit card interest, or APR, is incredibly high. It's how banks make a ton of their money. Carrying a balance from month to month is like willingly giving the bank your hard-earned cash for no reason. It's the fastest way to get into debt. So the golden rule is to only charge what you can afford to pay off completely before the due date. Another key concept is your credit limit. This is the maximum amount of money the bank will let you borrow. For a first-time card, this might be low, maybe $300 or $500. It might seem small, but it's a test. Now, let's introduce the two main contenders in this beginner card showdown. First up is Discover. You've probably seen their commercials. They are known for being incredibly friendly to newcomers in the credit world. The Discover It Secured Credit Card, Discover It Student Cashback. Discover has carved out a niche with excellent customer service based in the United States. And some surprisingly generous rewards programs, even for people who are just starting out. They are all about giving you a solid, positive first experience with credit. Discover's whole philosophy seems to be about education and support. They don't just give you a card and wish you luck. They provide tools to help you understand and track your credit score. They were one of the first major issuers to offer a free FICO score on your monthly statements. On the other side of the ring, we have Capital One. Capital One is a massive financial institution, and they are a powerhouse in the credit card market. They are famous for their straightforward ads asking, "What's in your wallet?" For beginners, their key offerings, the Capital One Platinum Credit Card and the Capital One Quicksilver One Rewards Credit Card. Capital One is known for its willingness to approve applicants who might be turned down by other big banks. They use sophisticated data analysis to assess risk, which often gives people with thin or no credit files a chance to get started. Capital One's strategy is all about simplicity and access. Their cards are typically very easy to understand. When it comes to rewards, this is where things get interesting. Let's start with Discover. Discover is unusually generous for a beginner card issuer. Their Discover It Student Cashback Card offers 5% cash back on rotating categories each quarter. Grocery stores, restaurants, gas stations on up to $1,500 in purchases. On everything else, you get a standard 1% cash back. The best part? At the end of your first year, Discover will automatically match all the cash back you've earned. There's no limit. If you earned $200 in cash back, they give you another $200. That's a total of $400, which is incredible for a student card. Even their secured card, the Discover It Secured Credit Card, offers rewards, which is very rare in the secured card market. You get 2% cash back at gas stations and restaurants on up to $1,000 in combined purchases each quarter. Plus, you get 1% cash back on all other purchases. Now let's look at Capital One. Their approach to rewards is more about simplicity and consistency. Their main rewards card for beginners is the Quicksilver One card. It offers a simple, flat 1.5% cash back on every single purchase, with no categories to track and no limits on how much you can earn. You just use the card, and you know you're getting 1.5% back on everything. The Capital One Platinum card, on the other hand, is a purely credit-building card and does not offer any rewards. Fees are the enemy of building wealth, so let's break down what you can expect to pay. Discover actually has a huge advantage here. Most of their beginner cards, like the Discover It Student Cashback and Discover It Cashback, have no annual fee. That's $0 to keep the card open each year, which is honestly perfect for a beginner. Even more impressively, Discover cards have no foreign transaction fees. This means if you travel abroad or buy something from an international website, you won't get hit with that extra 3% fee that most other cards charge. This is a fantastic and honestly pretty rare perk for a no annual fee card. Discover is also very forgiving with its other fees. For your first late payment, they won't charge you a late fee. They give you a one-time pass because they know mistakes can happen when you're just starting out. After that, the late fee can be up to $41, so you definitely don't want to make it a habit. Now for Capital One, their fee structure is, well, a bit more of a mixed bag. The Capital One Platinum card is great because it has no annual fee. However, like most cards in its class, it does have a foreign transaction fee. The Capital One Quicksilver One card, the one that gives you 1.5% cash back, typically comes with a $39 annual fee. You have to decide if the cash back you earn will be more than that $39 fee. If you spend over $2,600 on the card in a year, you'll break even. For other fees, Capital One is pretty standard. They will charge a late fee of up to $40 if you miss a payment, and they don't offer a waiver for the first time like Discover does. The main reason to get a beginner credit card is to build your credit history. Both Discover and Capital One are excellent for this because they report your payment activity to all three major credit bureaus, Experian, Equifax, and TransUnion. This is honestly critical. Some lesser-known credit builder cards might only report to one or two, which is just not as effective. Having your responsible behavior reported to all three ensures that any lender who pulls your credit in the future will see your positive history, giving you the best possible chance of approval. Discover provides you with a free FICO Score 8, which is one of the most widely used credit scoring models by lenders. You can see it right on your monthly statement or by logging into your account online. They also provide some context, showing you the key factors that are impacting your score. This is like getting a personalized coaching session every month. You can see directly how your actions, like paying your bill on time or keeping your balance low, are affecting your score. Capital One offers its own tool called CreditWise. This tool is free for everyone, even if you're not a Capital One customer. With CreditWise, you can see your VantageScore 3.0, which is another common credit scoring model. CreditWise offers a credit simulator that lets you see how potential actions, like paying off your balance or applying for a new loan, might affect your score. This can be a pretty powerful educational feature, helping you make smarter financial decisions before you actually make them. Both companies also offer a clear path to a better card. Let's boil this all down into a simple list of pros and cons. Here's a quick two-column rundown. Discover on the left, Capital One on the right. Discover. First, the rewards are fantastic. The cashback match at the end of the first year is unbeatable. Discover. Second, the fee structure is super friendly. No annual fee on most cards. No foreign transaction fees. A waiver for your first late payment. Discover. Third, free FICO score included. Discover con. Main issue, not as widely accepted outside the United States. Another downside, rotating 5% cashback categories. You have to remember to activate them each quarter. Now Capital One, Biggest pro, a high likelihood of approval. Their Quicksilver One card gives a simple 1.5% flat rate cash back on everything. Capital One cards are Visa or MasterCard, accepted virtually everywhere worldwide. Capital One cons. First, Quicksilver One has a $39 annual fee. They also commonly charge foreign transaction fees. There's no one-time late fee forgiveness like Discover offers. And CreditWise uses the VantageScore model, not the FICO score most lenders use. Bottom line, Discover is beginner-friendly with big first-year perks and education. Capital One is highly accessible and globally accepted. Pick Discover for safety and learning. Pick Capital One for accessibility and global acceptance. So, after this deep dive, which card wins the showdown for beginners? The truth is, there isn't one single winner. The best card for you depends entirely on your personal situation and your goals. However, we can make a strong recommendation. For the vast majority of beginners, especially students, the Discover It card is the superior choice. No annual fee, incredible first-year cashback match, no fee on your first late payment, free FICO score and educational tools that give actionable feedback. International acceptance can be a concern for frequent travelers, but it's minor for most beginners. Discover's ecosystem is built to help you succeed and rewards you generously. If you can pay your bill on time and you're willing to engage with rewards, Discover offers a faster, more profitable path to building excellent credit. It's one of the best starter cards on the market. That said, Capital One is not a bad choice. Capital One plays a crucial role for approval and credit building. Ultimately, your first card is a tool, not a trophy. The most important decision is how you use it. Follow these steps and you'll be on your way to a fantastic credit score that opens doors. Both Discover and Capital One offer excellent starting points. Analyze your needs, pick the fit, and start your financial journey with confidence.